Dividend investing has a large compounding effect, especially when you focus on investing into quality companies that continue to increase the amount they pay in dividends over time. This is the same strategy that has allowed Warren Buffett's Coca-Cola investment to achieve a dividend yield on cost of over 54%, and it's the same strategy that I implement with my personal dividend portfolio. In this video, I'm going to be revealing 5 of my current favorite dividend growth stocks. I'll be reviewing each of these stocks and also showing you exactly how much I paid for each of these. So that being said, let's go ahead and jump into the video. And the first dividend growth company that we are going to be looking at is Jefferies Financial Group, stock ticker JEF, currently trading at $39.03 per share. Now, I hadn't heard of this company not too long ago, but it was first brought to my attention when Berkshire Hathaway added it to their portfolio in Q3 of 2022. And if we jump over to a website called Dataroma, we can see right here they added around 433,000 shares to their portfolio in Q3 of 2022. Now, over the past year, they're up about 11.39%, but over the past month, they're up around 2%. And if we jump over to my do-it-yourself investor toolkit, I'll go ahead and zoom in so you can see a little bit better. But if we come over here, you can see the position right here, and I'm currently up a little over 14% on this position. I bought it in at a price of around $34 per share. Now, let's go ahead and jump over to our stock valuation spreadsheet to see if we can find a fair value for this company. I'll go ahead and come up here and plug in JEF and hit enter. And remember, if you'd like to be able to download any of the spreadsheets in my video, then you can head over to my Patreon page at the link in the description. But if we come over here and look at the dividend data, we can see they're currently paying out $1.20 per share, and they have a starting dividend yield of 3.07%. So a pretty solid starting dividend yield, obviously. But if we jump back over to Seeking Alpha, we're going to look at something even more impressive. If we click on the dividends here and look at the dividend history, we can see they have been increasing the amount they pay in dividends for around 6 consecutive years. Scroll down a little bit more, and if we look at the 5-year dividend history, we can see 5 years ago, they were paying out 9 cents per share quarterly. Jump forward to now, that is now 30 cents per share every single quarter. So that's pretty unbelievable dividend growth. If we jump over to the dividend growth tab and scroll down, we can see their 5-year compounded annual dividend growth rate is 31.89%. That is pretty incredible dividend growth over that time period. So it's pretty obvious why this is one of my favorite dividend growth companies. Let's go ahead and jump into some of the valuations. And the first one we'll look at is Graham's valuation. You can see the formula right here that Benjamin Graham lays out for us. We plug in our earnings per share, our growth rate projection, and the current yield on AAA corporate bonds. And that gives us an intrinsic value of $50.37 per share, quite a bit higher than that current trading price. Now, typically for financial stocks, I'd like to next look at the historical price to tangible book value. So let me go ahead and zoom out just a little bit more. But essentially what I've done is I plugged in the share price and the tangible book value per share, and we can see the historical price to tangible book value, and the current price to tangible book value is sitting at 1.06. So it is kind of in line where it's been historically speaking, but Warren Buffett typically looks for companies that are close to around 1 for their price to tangible book value. He thinks that's a pretty good value to buy into financial stocks at, so it's no wonder that he did consider adding this to his portfolio. And jumping over to our multiples valuation again, essentially what we're doing is we're taking companies that are similar in structure and using a price to earnings multiple to value them. So we take the average price to earnings multiple, multiply it by JEF's earnings per share, and we come to an intrinsic value of $35.40. Whenever you do this valuation with a financial stock, it's also important to look at the ROA analysis for these same companies, and we can see JEF actually does have a higher ROA. So in my opinion, I think it is justified that their stock price is a little bit higher than the valuation we came to with the multiples valuation. Now, the last valuation we'll look at for this company is the dividend discount model. And again, we've seen absolutely unbelievable dividend growth from this company. So I plugged in the quarterly dividend payouts over the last few years so we can see how much they pay out each year. And the dividend growth has been 20%, 33.3, 25, and 20. Again, absolutely unbelievable dividend growth over that time period. So moving forward, I'm projecting a growth rate of around 6%, discount rate of 8.5, and that gives us a dividend discount model price per share of $50.88. So when we jump over to our output tab, we can see all the valuations we did, and when we average them together, we come to an intrinsic value of $45.55 per share. So if we apply a 10% margin of safety, we can see based upon that, our acceptable buy price is around $40.99. Let's say we were to plug in a margin of safety of around 20%. Our acceptable buy price would be around $36.44. So it's not quite in that buy range, but if we look at the past year, we can see on Seeking Alpha that there has definitely been opportunities to buy in with that share price. So there you go. There's the first dividend growth company that I love in 2023. Let's go ahead and look at the next one. Another amazing dividend growth company is Broadcom, stock ticker AVGO, currently trading at $595.59 per share. We can see over the past year, they're up about 2.87%, and over the past month, they're up about 2.24% again. This is another company I fairly recently added to my portfolio. I'll go ahead and zoom in over here, and we'll scroll down, and you can see currently I'm up around 14.71% on this position. So let's go ahead and jump into our stock valuation tool. We'll come up here and plug in the stock ticker AVGO and hit enter. And again, this data will all load in. If we come over here, we can see they're paying out $18.40 per share, which gives them a pretty decent starting dividend yield of around 3.09%. Let's go ahead and jump back over to Seeking Alpha and look at this dividend metrics. We can see the dividend grades from Seeking Alpha for safety, growth, yield, and consistency are all pretty solid. But again, the dividend growth is what's really unbelievable. If we look at the 5-year compounded annual growth rate, it's sitting at around 28.57%. But what's even more impressive is this 10-year compounded annual dividend growth rate, 39.4%. I think out of all the stocks I've ever analyzed on this channel, this is the highest 10-year dividend growth rate I've ever seen. So obviously, really huge emphasis on dividend growth with this company. Let's go ahead and jump into our valuations. We can see Graham's valuation right here. We plug in our variables just like we did last time, and we come to an intrinsic value of $570, which is actually a little bit lower than that current trading price, as we can see right here. But let's go ahead and jump over to our discounted cash flow analysis, and essentially, we're valuing the company based on how much free cash flow we think they'll produce in the future. So after analyzing the historicals, I projected a growth rate of 11% to the future free cash flows, took the present value of those future free cash flows, added them together, added the company's cash, and subtracted out their total debt to get that equity value. And after that, I divided by their shares outstanding, and I came to a discounted cash flow price per share of $817.20. Quite a bit higher than the current trading price, actually. Now, the next valuation I looked at was the multiples valuation. We already talked about that with the last stock, JEF, but you can see the comparable companies right here. We take the average price to earnings and multiply it by AVGO's earnings per share, and we come to an intrinsic value of $525. Now, the last valuation we'll look at is the dividend discount model. And again, it values a company based on how much they pay out in dividends and how much that dividend is increasing. So I plugged in the quarterly dividend payouts for this company so we can see our yearly dividends. This allows us to again see our dividend growth rates, and we have 22.6, 10.7, 13.89, and 12.2. So again, really solid dividend growth. Moving forward, I'm projecting a dividend growth rate of 6.75%, discount rate of 9%, and that gives us a dividend discount model price per share of $872.98. So when we jump over to our output tab and average our 4 valuations, you can see we come to an intrinsic value of $696. If we come down here and apply a 10% margin of safety, we can see our acceptable buy price for this company is around $626 per share. Let's say we apply a 20% margin of safety, our acceptable buy price is around $557 per share. And just like JEF, there's definitely been opportunities within the last year to buy in at a really solid price, as you can see right here. But let's go ahead and look at our third dividend growth company. And the third dividend growth company that we are going to be looking at is a more well-known company. That is Lowe's, stock ticker LOW, currently trading at $212.75 per share. We can see over the past year, it's down close to 5%, but over the past month, it's down about 0.04%. And again, this is actually a fairly large holding in my portfolio. If you want, I'll go ahead and blow up this chart, and you can see Lowe's makes up about 5% of my entire dividend portfolio. And if I go ahead and zoom in just a little bit closer, we'll come down here and look at the growth from this position. We can see for my Lowe's position, I'm currently up about 14.63%. Let's go ahead and jump into our stock valuation spreadsheet. We'll come up here and plug in the stock ticker for Lowe's and hit enter. And again, that data will load in. The starting dividend yield is a little bit lower than the other companies we've looked at so far, around 2%, but the payout ratio is nice and low as well, 25.9, giving it plenty of room to continue to grow that dividend over time. If we jump into Graham's valuation, I'll go ahead and zoom in again. We can see we actually come to an intrinsic value of $189.49 per share, a little bit lower than that current trading price, but the discounted cash flow model produces a much higher valuation. We can see we have a growth rate projection for the future free cash flow of around 8.5%. And after adding the company's cash and subtracting out the total debt, we come to an equity value of $170.148. We divide by the shares outstanding and come to a discounted cash flow price per share of $257.21. That's a pretty strong valuation. Now, jumping over to our multiples valuation, you can see the comparable companies we're looking at right here. The average price to earnings for them is around 24.32, and when we multiply that by Lowe's earnings per share, we come to an intrinsic value of $195.48. Now, jumping over to our dividend discount model, again, we're going to plug in those quarterly dividend payouts for Lowe's, which you can see right here. So we can see our yearly dividend payouts, and this gives us our year-over-year dividend growth rates of 14.5, 9.09, 33.3, and 31.25. The last two dividend growth rates have been unbelievable. So moving forward, I'm projecting a growth rate of 7.5% and a discount rate of 9%, which gives us a dividend discount model price per share of $301. Now, what's even more impressive about the dividends for this company, if we come over to Seeking Alpha and check the dividend history, we can see they've been increasing the amount they pay in dividends for 59 consecutive years. That's absolutely unbelievable. And if we jump over to the dividend growth rates, again, if we look at the 5-year and the 10-year compounded annual dividend growth rate, both over 20%. So when you take into consideration they've been increasing dividends for that long and they still have that high of dividend growth rates, pretty unbelievable what this company's been able to do. So when we jump over to our output tab and see our four valuations averaged together, we come to an intrinsic value of $235.80. Now, if we apply a 10% margin of safety, we can see based upon that, our acceptable buy price is $212.22, so it's barely a little bit lower than that current trading price. Let's go ahead and apply a 20% margin of safety based upon that. Our acceptable buy price is around $188.64. Let's go ahead and jump forward and look at our fourth company. And the fourth dividend growth company that we are going to be looking at is Visa, stock ticker V, currently trading at $223.56 per share. Over the past year, they're only down about 0.5%, and over the past month, they've traded pretty even. If we go ahead and jump into my do-it-yourself investor toolkit, I'll zoom in about 90%. We'll come over here and you can see my Visa position. I'm currently up about 20%. I was able to buy in at a good price of around $185 per share. Let's go ahead and jump into our financial stock valuation spreadsheet. We'll come over here and plug in the stock ticker V and hit enter. And again, all this data will load in. If we come over here and look at the dividend data, they're currently paying out around $1.80 per share, which gives them a starting dividend yield of just 0.81%. And I know for a lot of people, that's going to be a huge turnoff. I don't typically invest into dividend stocks if they're yielding less than 1%. There's a few exceptions to that, and this is one of the companies, and obviously that's going to be because of the absolutely unbelievable dividend growth that this company has seen. If we come down here, we can see that their 10-year dividend growth rate, again, close to 20%, so that's really impressive. If we jump over to the dividend history, we can see they've been increasing dividends for around 14 years now, and if we look at the past 10 years, we can see in 2013, they were just paying out 8 cents per share quarterly. Jump forward to now, that is now 45 cents per share quarterly. So again, really good dividend growth, but not a good starting dividend yield. If we go ahead and jump over to Graham's valuation, I'll zoom in here just a little bit. We can see after plugging in our variables, we come to an intrinsic value of $154 per share. And keep in mind, for all these Graham's valuation, the valuation is going to be driven down a little bit by the fact the current yield on AAA corporate bonds is a little bit higher than it has been over the past 5 years. Typically, it's been closer to around 3, and you can see if that's the case, the intrinsic value jumps up quite a bit. But let's go ahead and jump over to our historical price to tangible book value. Unfortunately, I couldn't find a lot of good data for this scenario, so we're going to keep moving forward. Looking at our multiples valuation, you can see the comparable companies that we're using, and we come to an intrinsic value of $242 per share. Now let's go ahead and jump over to our dividend discount model. And again, we can see the quarterly dividend payouts here, the yearly dividend payouts here, and more importantly, our dividend growth rates of 20, 6.6, 17.19, and 20%. So again, really good dividend growth over the past 4 or 5 years. I'm projecting a dividend growth rate of 7.75%, discount rate of 8.5%, which gives us a dividend discount model price per share of $258.60. And keep in mind, anytime you project a high dividend growth rate, we didn't look at the payout ratio. You always want to check that. We can come over here. We can see the payout ratio is only sitting at around 22%. So definitely a safe dividend paying company. So when we jump over to our output tab, we can see our 3 valuations. And when we average them together, we come to an intrinsic value of $218.21. So it's really close to that current trading price. So it looks like it is trading close to fair value. If we apply a 10% margin of safety, we can see our acceptable buy price is around $196 per share, and a 20% margin of safety gives us an acceptable buy price price of around $174.56. But let's go ahead and move forward and look at our last dividend growth company. And the last dividend growth company that we are going to be looking at is actually a company I specifically saved for last, because if you've been watching the channel for a while, I talk about them quite a lot, and that is Microsoft, stock ticker MSFT. Currently trading at $258.06 per share. Over the past year, they're down about 11.24%, but over the past month, they're up close to 8%. And let's go ahead and jump over to my do-it-yourself investor toolkit. I'll blow this up and you can see Microsoft is actually one of my largest positions. It's about 15% of my dividend portfolio, and I'll go ahead and zoom in a little bit right here. If we come over here, you can see this is actually a position I'm down just a little bit on right now, about 3.58%, but I'm not really concerned with that because I believe in the company so much long term. Let's go ahead and jump over to our valuation spreadsheet. I'll come up here and plug in the stock ticker from Microsoft and hit enter. And again, this data will load in. This is another company whose starting dividend yield isn't really that great. It's only around 1%, but again, if we jump back over to Seeking Alpha, come over here and look at the dividend growth, we can see over the past 5 years, they have a dividend compounded annual growth rate of 9.92%, and over the past 10 years, 11.7%. And I think in the future, it could be even higher than that. So jumping back over to our spreadsheet, we'll go to Graham's valuation. I'll go ahead and zoom in right here. And we can see after plugging in all of our variables, we come to an intrinsic value of $206.57. For our discounted cash flow model, you can see I'm projecting a free cash flow growth rate of around 15% for the future free cash flows after getting the present value and adding those cash flows together, adding their cash and subtracting out the total debt, getting the equity value and dividing by the shares outstanding. I came to a discounted cash flow price per share of $315.05. Now, for the multiples valuation, there really weren't a lot of great comparables for this company. I don't think it provided a fair valuation, so I didn't use it. But looking at our dividend discount model, again, we can see our dividend growth rates of 10.8, 9.8, 10.7, and 9.7. Again, I think it could be even higher than that in the future. So moving forward, I'm projecting a dividend growth rate of 8.25%, discount rate of 9%, and that gives us a dividend discount model price per share of $392.59. So when we jump over to our output tab, we can see the three valuations that we use, and that gives us an intrinsic value of $304.73 per share. So when we apply a 10% margin of safety, we can see our acceptable buy price is around $274 per share. With a 20% margin of safety, our acceptable buy price is $243.79. And again, if we look at the past year, the way this company has traded, we can see again, there's definitely been opportunities to buy in with that margin of safety. So there you go. Those are 5 dividend growth companies that I really love. I think they have phenomenal dividend growth, and I own all 5 of them in my personal dividend portfolio. If you'd like to be able to download any of the spreadsheets using this video, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.